Hello all, hope everyone are doing good. Today I am here with another concept, rules of debit and credit. We also say this as the golden rules of accounting or golden principles of accounting. So in accounts, when we draw accounts, like the very first process of doing it is like recording the transactions in the journal book. Here we use the golden rules of accounting to draw the accounting, that means to record the transactions in the journal book. So here's the foremost thing that we need to start with to understand the golden rules of debit and credit. So firstly, the question is, why do we need to follow these rules of debit and credit? So in an organization, every day we come across different types of accounts. Like we deal with number of people, we deal with number of assets, like we purchase assets and we sell assets. And we also have like cash inflows and cash outflows which are happening in the business organization. So anytime you are learning how to do accounting, like the first and foremost thing that we need to understand is the rules of debit and credit. And you know what is the how important is debit and credit in an accounting. So now here we'll understand and we clear all the questions with regard to debit and credit, like what has to be debited and what has to be credited given a situation. So without any late, let's just go get into the video. Firstly, the rules of accounting. Before we start with rules, we'll understand, along with the rules, we'll understand the classification of accounts. So firstly, we have one classification which is the personal account. Personal account deal with the persons, like it can be natural person or artificial person. Now the question comes, who are called natural person? So who are called natural persons here? It can be like we as the human beings are the natural person, and an organization, when it deals with the natural persons like Ram, we create a Ram account. When it deals with Ramesh, it creates Rick Ramesh account, Robert account, and so on. We deal with debtors, creditors, all these, right? So those can be like Ram, Ramesh, Robert. We take the names of that persons. So that persons are called what? Natural persons. So the personal account rule tells us like what to do, either to debit or either to credit when we are dealing with the natural person. Now understand, there is another classification under the personal account which is artificial person. Now what is artificial person is the question. So who are the artificial persons is the firms or the institutions or any organization that we create to carry on the business are nothing but is nothing but an artificial person. Say for example, XY and Co or ABC Limited, etc. So these are the examples for artificial persons. So now we'll learn what is the rule for personal account. Simply nothing but when we are dealing with in an organization with any person, be it a natural person, be it an artificial person, we have to follow the rule of personal account. The rule comes here like what we need to debit is debit the receiver. Be it any transaction, if there is a receiver in it, like we as a receiver or the other person as a receiver, we have to debit the receiver. And who has to get credited is credit the giver. Hope you all understood like how we deal with the personal account while doing the accounting transaction. And writing the journal entry will be very much easy when you understand in deeper the rules of accounting. Now this is the first account classification, the personal account, and the rule here goes is debit the receiver and credit the giver. If you understand this rule, any transaction that we do with any person, that can be easily be recorded in the journal book. Now coming to the second classification, we have something called real account rule. Real account. Now here, the real account, it actually deals with all assets. So if I'm mentioning all assets, it's nothing but it includes all tangible assets and intangible assets. So now the question comes, what are tangible assets? So tangible assets are here what we can see, what we can touch, and what we can sense. But whereas intangible assets are those which we cannot see, which we cannot touch. Okay. We'll see the rule of this real account. Under real account, whenever we are dealing with assets, we have to debit what is coming in. Debit what comes in. And you have to credit what is going out. So here I just want to take one more example for this. When I'm purchasing an asset, say for example machinery, I have purchased an asset machinery for cash. Okay. So what is coming in here is machinery. So I have to debit machinery. Machinery account debit. Why am I debiting it? Because debit what comes in. Machinery is coming in, so I'm debiting it. And what is going out is cash. Debit what goes out. Even cash is also an asset. So here, debit what comes in, credit what goes out. Machinery is coming in, cash is going out. So that's why I'm debiting machinery and crediting cash. Hope it is clear with the two rules of accounting. One is personal and the other is real. Now, the third and the last rule of debit and credit is when we deal with nominal accounts. So, nominal accounts. Under nominal accounts, we deal with the transactions with respect to expenses, losses, incomes, and gains. So, as an example, I can consider like what can be an expense is like salary that we need to pay to our staff. Loss can be loss on sale of an asset. Income, rent received. I'm trying to give you an example so that you'll understand more clearly. Gain can be profit on sale of an asset. These are just an example just to understand us, to make it easy for us to understand. Now coming to the rule, what does nominal account rule says is debit all expenses on losses. So whenever we are dealing with expenses and losses, simply just remember we need to debit the transaction. That means the salary has to get debited, and the loss on sale of asset, if I say, that has to be debited. And what we need to credit here is credit all incomes and gains. So whenever we deal with a transaction where we are having income, that means when we are receiving an income or getting a gain, then we need to credit the transaction. So here are the three golden rules of accounting that we understood so far. Hope everyone are clear with this, and now we can easily draw accounting. I mean, we can start with the journalizing transactions. That's it for today's class. Happy accounting.